What's up everybody? Welcome to the Stocks channel. My name is Cory, and today's special update we're going to be talking about exactly why I think the bear market is likely over, and I'm going to walk you through the process I used to determine that. We'll be using a daily chart of the SPX S&P500 index, so let's crack open this chart and see what's going on in the stock market today. Alright, so I'm going to be doing this video completely for free, and all that I ask is that you smash that like button and share this video with your friends and family, because this is very important information and it is something you are going to want to know looking forward in the stock market. By liking and sharing this video, you are spreading awareness and helping retail do a lot better in the stock market, because the average retail investor and trader is going to be the last ones to learn about this information. So please do your part in helping spread this information. Alright, so getting into how I determined that the bear market is over, you will need to understand the backtesting rules that I'm using. So let's just walk through them step by step, with the first rule being that I'm only looking at data from the SPX S&P500 index, and I'm only looking at the daily chart. The second rule is that I'm only looking at declines greater than 19.5% from closing price highs to closing price lows. So I will be only looking at snapshots in time in the stock market where closing price highs to closing price lows were 19.5% or greater. The third rule we have to follow is that price action has to retrace greater than 50% of the bear market from closing high to closing low. So price action will have to close back above 50% from the highest point of the market to the lowest point of the market. That is going to tell us that the bear market is over. And then the final and fourth rule is that we are only looking back 35 years, because I do believe looking back 35 years is plenty of data to help us draw a conclusion. Now, using this data, we are going to answer three important questions. And the first question is, what were the drawdowns looking forward after the bear market was over? The second question we'll answer is, what were the gains or losses looking forward after the bear market was over? And the final question to answer will be, how long did it take to reach new all-time highs once the bear market was officially over? Now, there's an important note to take away from this, is that the past does not guarantee the future. We are simply backtesting this data to help us understand the odds looking forward and help us manage our risk about the probability that the bear market is over and how we can best position ourselves to take advantage of that. So do not leave here today thinking this is a 100% guarantee of anything, but I am going to give you very compelling evidence that should help you do much better in the stock market looking forward. Alright, the first couple of these I am going to walk through this with you together, but then the rest of them I will have some of the data already on the chart to help speed things along. So the first step is to take a look at our 2022 bear market and identify from closing high to closing low when we officially entered the bear market. And it does look like it was officially the bear market around June 13th of 2022. And we could see very clearly that we did exceed the 19.5% decline from closing high to closing low. So the next step is to now draw a Fibonacci retracement tool from that closing high to the lowest closing low that we had during the bear market and see if we retrace the 50%, because that is the second rule that we need to follow. So I put the Fibonacci right here on the screen from the closing high to the closing low, and you can see as of Friday's price action, which was August 12th of 2022, we have officially closed over the 50% retracement of the bear market. And that is going to be our criteria that the bear market is over, which means we now want to assume in 2022 we are out of the bear market and heading back into a market condition where we will start making higher lows and higher highs from here. Now, in order to know if this is true, this is why we need to backtest and continue to look back through time to see if this was also the case. And also we want to understand what were the market conditions. Okay, so moving right along, we need to go to our next bear market, which was March of 2020. And we will do this one again together. And then from there, I will have a lot of the data already on the chart so we can save some time. So remember the first rule, we need closing price highs to closing price lows to exceed 19.5%. And we can see that we did start achieving that back around March 12th of 2020 with a decline greater than 19.5% from closing high to closing low. So again, we were officially in the bear market by that point. So now we need to see at what point did we retrace 50% from the closing high to the closing low. So going from the closing high to the closing low, we can see that we started to close back over the 50% retracement around the time of April 14th, 2020, which tells us we were officially out of the bear market and we want to start preparing for a market condition of higher lows and higher highs looking forward. So keep in mind, we are going to do this process for all of the bear markets looking back 35 years, and then I will compile all of the data and show it at the end of the video. So you will have a very clean summary of this entire backtest, which will help you in the stock market looking forward, and it will help you have a very objective and unbiased view of the bear market looking forward, which is why I do believe this video is so important and why I think you're going to learn a lot and take a lot away from this information. So the first thing I want you to pay attention to is after we were officially out of the bear market, we did not have anything more than a 3% retracement below that price action, and we just continue to go higher in that bull market. So this is going to be very important because we are going to look at this information for every bear market looking backward. All right, now I want to speed up to save some time. So the next bear market we are looking at is back in 2018 in Q4. So again, we had a bear market, and now we want to see how long it took for us to close back over the 50% retracement and then what happened looking forward. And we could see that we did close back over the 50% retracement on January 18th of 2019. And looking below that price action, we only had a drawdown of about 1% before we continued to go higher. So remember, all of the data for drawdowns and performance looking forward will be near the end of the video, but you can clearly see looking at this chart, after we got the official criteria that the bear market was over, we had a very strong bull market that followed suit. Moving right along, we have 2011, which barely missed the criteria of the 19.5% drawdown from closing high to closing low, but we will go ahead and look at it anyway. So if we go ahead and do our retracement, we can see that we exceeded the 50% drawdown in October 21st of 2011. And looking forward, the drawdown from that point was just right around 6%. And yes, we did go right back into a bull market from there. Moving right along, we have the bear market of 2008, which we can see officially entered the bear market around July 9th of 2008, but we did continue to decline from there. So it will be important for you to see that there was no point during this bear market that we ever had the retracement greater than 50%. So that is why the bear market continued to prolong below the 20% drawdown, but we never had any confirmation that the bear market was over until we actually hit rock bottom. And that is very important to understand that we are not in that condition in 2022. I already know when I made this video, there's going to be a lot of comparisons to 2008, but you can see based on what I just showed you during that entire bear market, we never retraced 50% until after we hit rock bottom. And then when we finally reached the 50% retracement was all the way over here in December of 2009. So do not confuse the information, because there was no 50% retracement during that entire bear market until all the way near the end of 2009. And that told us the bear market was over. So there was a very long period of time before we realized the bear market was over after the bear market of 2008. That is going to be completely different than 2022 because we did already receive the signal that we are out of the bear market. And in 2008 bear market, you did not get that signal until December of 2009. Now it's important looking forward from there, because that was a very drastic bear market. You need to understand that below the signal of when we exited the bear market, there was only a drawdown of around 10% looking forward, even though it was a very choppy market condition. And yes, you can see it did go back into a bull market. So you can see even after such a drastic bear market like 2008, the drawdowns were still relatively muted looking forward, which is something very important to understand. The next bear market we're looking at is the bear market that started in 2000. And again, this bear market did prolong because it didn't actually bottom until the year 2002. So again, I want to do that same exercise so you understand we never retraced greater than 50% of that bear market during this entire point. Because if I do closing high to closing low, you can see that while we did reach up to the 50% retracement, we never actually closed above it. So if I zoom in here, you can see this very clearly, that we got up to the 50% retracement of that bear market, but there was a very impulsive rejection from that resistance, and we continued lower to make a brand new low. This is why when you're doing a back test, you need to be very objective and you need to be very firm on your rules. And this did not violate our rule because we never closed above the 50% retracement. So it's very important to understand that we are being very strict on the rules here. So we cannot say that the bear market was over because we did not close above that level. And looking forward, we can see if we take the new low of the Fibonacci retracement from closing high to closing low, we are still not regaining the price action above the 50% retracement. So we need to continue to follow the price action until we do. And you can see even if we go all the way to the exact bottom of 2002, we did not fully retrace that bear market until all the way over here in 2004, which was in the January timeframe of that year. So again, that was a very brutal bear market that lasted multiple years, and it took a long time to get confirmation that the bear market was over, but we did not violate any of the rules that we set in the beginning of the video. So looking forward in 2004, once we got the official alert that the bear market was over, the drawdowns looking forward were well within the 10% drawdown, only drawing down about 8% below that level. And yes, as you can tell looking at this chart, we did return to a bull market. So yes, we spent more time on this bear market, but it's very important to understand that those prolonged bear markets still followed the same exact rules and the same objective criteria that we set in the beginning of the video. Our next bear market was 1998, which was only 19.3%, but again, it's close enough where I'm gonna go ahead and include it in the episode. And you can see by the time we had the 50% retracement, we were out of the bear market and well on our way back into a bull market, with the drawdown from that point only being about 1.3%. Moving right along, we have the bear market of 1990. So if we take our Fibonacci retracement from closing high to closing low, by the time we closed back over the Fibonacci retracement of 50%, we never looked back with no additional drawdown before we set brand new all-time highs. So that was a very bullish example. By the time we closed above that level, we had already seen the lows and we never looked back. And then our final bear market that I want to look at today was back here in 1987, where we did have that 33% bear market. And if we take the Fibonacci retracement tool from closing high to closing low, we can see that we were out of the bear market back here around October of 1988. And moving forward, the drawdowns below that level were right around 6.3%. And yes, we did go right back into a bull market after that point in time. So please, if you've made it this far in the episode and you see the value in understanding this information, please remember to smash that like button and share this video with your friends and family, because I do believe this is extremely important for the average retail investor and trader to understand, because this is the exact moment in time that we currently find ourselves in. If I just jump back to the year to date of 2022, you can see that we followed the same exact backtest rules we just went over, and we now have the condition where we are getting out of the bear market with the official daily close above the 50% retracement. And you can see, looking back 35 years, we had very favorable data that said it was still a great time to jump into the rally with muted drawdowns and a bull market that likely is going to follow suit. If you're new to the stocks channel, I do offer two services, with the first being Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ. And even in the bear market of 2008, it beat the market and had a very positive return. I also have the Stocks Channel Discord, where I share all of my intraday updates and analysis and bring new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. And you can also find out more information and how to subscribe to Bank Trade Alerts by clicking on the link below as well. So don't forget to like this video and share it with all of your friends and family so they can absolutely crush this market. And as always, I will see you in the next episode.